This is the Agribusiness Report. I'm Tony St. James, today joined by Bob Maurer. Bob's with Manduca Trading in Chicago. We'll have contact information for Bob in just a few moments. But, Bob, first place to start with is the fact that we're coming off of a Friday that normally we would be recapping some USDA reports. Those are obviously not around with the government shutdown, so where do we turn for information?
I tell you, you're right. We didn't get the report that came out on Friday, although we're still getting plenty of chat about expectations for what the report might have, could have, ought to said. So the market's trading off of that. You go off your favorite analyst, whoever that might be, maybe a pool of analysts, and just try to gain a consensus over, what expectations are relative to the variables that we're still looking at, such as yield for soybeans, such as an uptick in yield for corn, such as those numbers, and then you look at the worldwide situation, and again, you kind of go to your analysts who are out there, private and public, and try to just garner a good picture of what's happening, and you go that route. I mean, that's what most of the guys in the business that I know are trying to do, and that's not an unreliable portion of information by any means. The USDA is one data point. It's considered a reliable data point, but also, that's what makes markets, is sometimes the USDA comes out with numbers and the markets disagree with it or aren't quite at the same level as they are. So we turn to the private analysts and some that have good sources throughout the world. You just try to create a good picture of what's happening out there, and that's what you trade with. So, yes, we don't have that considered completely unbiased information from the USDA that we get on a monthly basis for the big monthly U.S. and world production numbers, ending stocks, etc. But nonetheless, we do have analysts out there to paint a good picture. And we're also not getting the day-to-day and week-to-week numbers. You look at the cattle markets, cash cattle, etc., out there that we're not getting from the USDA, box beef, box loads, prices on that, volume on that. We're not getting that daily information from the USDA anymore. And this afternoon, not that we would have because it's a holiday anyway, but the delayed data, which would have come out tomorrow on harvest progress and planting progress for the winter crops, we're not getting that, but we just kind of lean on the information that we have that supplements the USDA and try to gain a picture. Now, even though we have the information, one thing that's definitely been a ramification is kind of the way the market's been acting, and there's certainly a feel out there, for example, in cattle, where there seems to be a hand-to-mouth type of situation where we aren't seeing a whole lot of bigger time forward coverage. We're just kind of going week to week, and that's the way the players are playing it right now until we do get those data sources back. So I guess that would be the one thing that's kind of changed in the characteristic of how business is transacting. And in addition, maybe slightly lower volume levels in some of the markets as things are slowing down a little bit, just modestly so, until we get the more, I should say, both sets of information are timely and come in, as they should. Yet for the USDA being the big player out there and having all the resources it has, until that set of information comes back, I think that trading is going to just kind of take a little bit of a pause until we get that back in schedule again. And who knows when that's going to happen with the U.S. So we're trading the best we can with the information that we have, which is at this point pretty good.
I do know that you have clients in the southern hemisphere, so obviously that gives you some insight into what's happening outside the U.S. But back into the U.S., as we look at the corn market, a slightly higher close on Monday, and even when you look over at soybeans, higher close there. What's moving it?
Yeah, we're up, but nothing fantastically so. And if you ask what's moving, I think it's some of the uncertainty from the lack of data, like we had just mentioned. It's also the fact that there's still, some debate as to what yields are specifically for soybeans. There's also some debate as to the progress when it comes to harvest and how we're doing on a relative basis. And there's also some debate going on as to whether or not we could see some continued decent demand like we've seen recently in some of these commodities. So for soybeans and for corn and for wheat, I mean, that's really the play right now. And if you look at corn in specific, we've got harvest still continuing. Right now, the expectations for yields is coming in at maybe even as high as 160 bushels per acre on an average yield for the U.S., so that's definitely not a bullish element in my opinion for the market. So it certainly seems like the trend should be down, but nonetheless we were able to pop up a little bit today by a couple few cents there, and this was after making new swing lows for the move on Friday. So it would certainly seem that the market is due for a little bit of a bounce even after the big erosion in prices that we've seen. So maybe this is nothing more than that bounce in a downtrending market. Timing-wise, if you look at seasonality of corn futures, even in years where we've had big slides in these prices, and I was looking at correlation charts earlier, there's 10, 12-year correlation charts, basically where we're not looking at price levels, we're just looking at chart action. And this year's chart looks like 10 or 12 of the years in the past. So we've seen big declines like this in the past. And when we've seen big declines like this in the past, if history repeats itself, the projection for the next month or so is for the prices to bottom out right about here in time, right about here, and then bounce up for the next 30 days or so. So you're looking for a harvest low, even in a marketplace where we've seen a big erosion in prices. So I think that's another thing that's in traders' mind right now is just the fact that timing-wise, we should start to see a bottom at some point in this neighborhood, based on the calendar. Range of production estimates is, for the report that didn't come out last Friday from analysts, is a whopping 667 million bushels. And yield estimates right now anywhere from 152.9 to 159.4. But like I mentioned, there's some that are thinking that we could get maybe a 160 average. So obviously that's a pressure point for the marketplace, and it'd be hard to see a rather considerable bounce, even though timing-wise we would be looking for a harvest low. And then when you talk about corn, you got to be talking about wheat too, with the relationship there. And wheat's kind of an interesting story. We were able to pop up a little bit again today. The Minneapolis contract, the hard red spring, holding on to gains that we've seen over the last couple of weeks. Kansas City, or the hard red winter, the old Kansas City, the new CME group kind of wheat, also holding on to some good gains and sitting here up towards the highs recently. And then the spring or the soft red winter from Chicago also holding on to gains that we saw over the last couple of weeks. And really we've seen demand come back into the marketplace for the U.S. wheat. And although we've seen demand come back in, nonetheless, sooner than later, we're seeing some of our competitors also come online with their product, and we should start feeling the heat when it comes to pricing. And the prime example of that is that when you compare prices here in the U.S. to prices elsewhere, we're starting to lose some of our competitive advantage. And you can see that also from our trading partners up north. In Canada, they've got that large spring wheat crop flowing into marketing channels right now. That's obviously should be causing some competition for us, especially down in Latin America. And recent prices, just for example, for Canadian red winter wheat and Canadian red spring wheat, they've been about $265 or $253 per metric ton respectively. And you look at our prices for U.S. hard red winter wheat values in the Gulf or Pacific Northwest, and they're sitting at about $333 to $316 per metric ton. So roughly, $70 to $80 higher prices for about the same quality wheat coming out of the same neck of the woods. So I think that even though we've seen a good pop in prices for wheat, the fact that they're online up in Canada and elsewhere right now, although there are some problems, with some of the crops in the world right now, but nonetheless, it seems like there's going to be ample supplies based on private analysts that, we might see a little bit of a toppy action. So we're going to watch this and see how it develops over the next few weeks and into the marketing year to see if we do see that considerable competition come in, because that would be something that would help push the prices down a little bit. Now the oil seeds, soybeans also had a little pop today. Novi beans up 6 1/4, and again some uncertainty about yields. Obviously better than had been expected. That's why we were able to drop the Nov contract from over $14 a bushel down to where we are now, about $12.73-ish or so in the last month and a half. More of a balanced supply-demand scenario based on what's going on there right now, in as much as we got the yield talk, which is coming in better, but also weather lately, mostly favorable for harvest. Temperatures seem to be non-threatening. Precipitation and temperatures down in Brazil for seeding and germination look pretty good, and we're weighing that against the fact that, there's the sense now that Brazil's kind of running low on some of their unsold beans, and Argentina producers are not necessarily letting go of their beans quite yet because they're looking for a little bit of a pop in price and also maybe using it as an inflation hedge down there. So tight-fisted down in Argentina, maybe lacking of supply down in Brazil, and then we're working that against harvest going on here in the U.S. with the expectations of a little better yields. But we won't really know what the yields are. We get the private analysts, but we want to hear what the USDA has to say, so it'll be nice when they come back online. We'll get those final numbers, and then we can actually trade off them. But soybeans sitting around the 200 period moving average, just kind of moving north and south in there, and the moving average comes in around 12.75. So until we get some kind of new catalyst, maybe expectations of harvest really clipping along, or perhaps some new business comes in the U.S., I think we're going to be stuck in a range of about maybe $12.5 to maybe $13.5 over the next couple weeks or so.
So much we could be talking about. I know that you cover all of the commodities, so if we wanted to talk one-on-one, what's the best way to get in touch with you?
Sure, there's a few ways. You can pick up the phone. My number is 800-388-0998. You can give me a quick email. It's bmaurer@mandukatrading.com. That's BMAURER @mandukatrading.com. And then just come visit our website, which is www.mandukatrading.com.
Okay, 800-388-0998. And the website again is Manduca, MANDUCA, mandukatrading.com. Bob Maurer, Manduca Trading in Chicago, on today's Agribusiness Report.
Whew, hot enough for you?
Hey, life in the cornfields, my